Hi everyone, this is Stone Vase, and we are about to get on another private call that hopefully will be beneficial to everyone. And let's get started. I'll keep my client's name private, and here we go. Off to you, sir.
Tone, let's talk about the perfected versus unperfected candles on the countdowns. Often we see like for example,
Well, you mean on the setup, right? Because the countdown is the numbers below the candles.
That's what I meant. That's what I meant. Yeah, like I hear say, the 7 it's an unperfected 7 or something like that, or it's an unperfected count or an unperfected 9, to where it doesn't.
Right. It can only be an unperfected 9, right? Okay. So if you want some documentation on this, again on my website, I guess this document explains it pretty well. The very first one I have linked, in that it describes it in a screenshot like this. Let me zoom in a little.
Yeah, I'm not seeing anything on my screen.
Oh, I'm not screen sharing for you. Give me 1 second. Let me do that over our call medium. Forgot about that part. Screen, share screen. There we go. Let me know if that comes up on your end.
Yeah, I see that.
Okay, so the document that I clicked was from my website, Learn Trading. This guy right here.
Yep.
The time to mark indicator. Okay, so if you want some background reading, there's basically 2 types. There's the perfected buy and the regular buy. Same thing with perfected sell and a regular sell. So the rules are here, but I'm going to go back to my chart. I'm going to find a time period where you see both a perfected and a non-perfected, and then I can explain them.
Perfect.
So whenever the candle is red, it's perfected. And there it is. Okay, so here's a time period that has both. Okay, and I label them as such as well. Move this over. Zoom in. We don't need this guy. Here we go. Okay, so here you see the orange arrow versus the red arrow, and red means perfected, orange means not perfected. On the other side, the lime arrow versus the dark green arrow is the same thing, perfected versus non-perfected. So the mathematical reason why this 9 here is perfected is because the very high point, the high point of candles 8 or 9 is higher than candles 6 and 7. So there's an or here, there is an and here, right? So basically what it means is if the highest point, there is a possibility that the highest point in this whole move comes from a 5, but in reality, like 99% of the time, the highest possible point will come from candle 6, 7, 8, 9, if you're going to get to a 9, realistically. Okay, so we are in a perfected situation when you see how the tip of number 8 is higher than the highs of both 6 and 7.
Got it. I understand that. So let me ask you this:
that doesn't happen here because the high of the 7 is higher than 8 or 9.
And then how many? And statistically speaking, how many of in this situation you're pointing out right here, when the 7 was the highest and it did not get perfected, how often does it get perfected? And what's the expiration period for it before it's considered like it'll never get perfected?
Oh, that's it. Once the 9 closes. Once the 9 closes, it can never get perfected.
But that 1, if you keep moving over to the right, the green candle with a 1 above.
No, that doesn't matter. That doesn't
matter.
At that point, it doesn't matter. That's it. It's either whether this 9 was perfected or it wasn't, right?
So there's no hard rule that it has to become perfected.
No.
Later at some point.
No, it's just that It's better to see a perfected 9, and more often you will see a perfected 9. So when the 9 is not perfected, it kind of, in a way, you almost miss the beginning of a move, right? Like here is a green 9, and you can see how it's not perfected. And clearly you were like 20% off the low, right? It was just such a big move, right? Like you want to see this 9 come with a low. Like when a 9 comes unperfected, it's usually not as good of a risk-reward trade.
So my questions on this are coming from the following. In this scenario that you're looking at right here, right? A lot of professional or so-called professional traders on chat groups, are saying like, well, because this 7, because the 9 never came below the 7, eventually in a few months or maybe even 6 months, it's going to go back down there, and that confuses us.
Well, it clearly didn't in this case, right?
It didn't, but they're saying that eventually it will, and they're adamant about it. So I just want to hear from your perspective.
I'm not as adamant about it. I think that in some of these things, right, and Tom DeMark and Martin Armstrong and a lot of these other guys, I think they get, in my opinion, they get a little too obsessed with the significance of a penny, and I don't, right? So what I mean is, like I've seen Martin Armstrong do this, and I've seen Tom DeMark do this, like, well, if Apple closed today at exactly, $133.10, it would actually be a different scenario than if it closed 1 penny higher, right? Because with these numbers, 1 penny makes a difference. Because you're comparing the close to the prior high, you're comparing the close to the prior close, right? So being the difference of 1 penny seems to make a very critical difference in your trading. I have always thought that was crazy. And this is also why most bots fail. I think there needs to be some amount of like interpretation, right? Which is why in Bitcoin, I constantly say, don't get fooled when you have a single price flip in the middle of 9 down candles, right? And it goes to the same thing. Like these people are taking like the godlike statements from the people that created these systems, and they're taking them too far to the penny instead of using their own judgment.
Well, yeah, I was on a DeMark call the other day, and he basically said if, like in this situation, that 9 wasn't perfected, right? The 9 never came below the 7 there off that low. And he said, within 3 to 6 months, they always have to get perfected. So it is going to head down. But maybe he's discussing traditional markets and not an asset that trades 24/7.
Even in traditional markets, I would almost disagree with him. Okay. And if you have to wait 3 to 6 months to realize something, like why are you trading? Like there's so many opportunities in between that, that if it is going to go and make it perfected, eventually you will have infinite number of additional signs to be on that trade, not going back to something from 3 months ago.
Got it. Makes sense. That's what I needed to hear. Makes a lot of sense now.
Right. So I would basically say it's not perfected. Just be aware that chances are your risk-reward ratio on whatever you do after the 9 will not be as favorable most of the time. Okay? And there is still a slightly higher probability that it will become perfected, like mentally. Not, I mean, like this will never become a red arrow, right? No matter what, how, like once this candle closes, that's it. It was an unperfected 9. Now, in your mind, you can say, hey, maybe I shouldn't take the sell signal off this 9 as seriously as I would if it was perfected. But you can see just from these last 2 9s, the unperfected 9 gave you a higher 1 to 4 candle correction than the perfected one. Gave you like a bigger drop than the perfected one.
So that 2 hammer, that the red one. 2 right there, that low of 51, 114 actually goes into my next question. That is 150, 146 or so dollars above the previous high. So and that means we never really retested that. Now, with an asset like Bitcoin, what's I mean, I understand the $20, $40, but over $100 difference. Is that close enough to being considered perfected, or
Well,
excuse
no,
me,
no,
not
no, no,
perfected,
no, no. The perfected is out the
not
window here.
not perfected. I'm sorry. A back test.
Maybe. I don't know. This is okay. So I, I I don't know. This is up to you as a trader to try and decipher, right? So um, to me, this nine was not. I felt like we didn't go high enough above 5,000 to warrant a big back test to 5,000. Okay. This is why I was looking for the $5,000 back test off of the following nine,
Right.
which was perfected and was a doji candle
Right.
and was significantly higher from the prior swing high, and by percentage wise, very similar to what happened between 3,000 and 5,000. We then went from 5,000 to 7,500. The 5,000 back tested the $3,000 one perfectly. So I was expecting for more downside and a true back test of 5,000 from the next nine, not this nine. I felt that this nine was, you know, there. I felt that this nine was not really. I felt like we were going higher here. I didn't
So then,
feel like this nine warranted a major pullback. Though I will say that when this candle that you see with a two on it is crashing, I wouldn't blame anyone, including myself, for going short here and getting caught and losing money on this trade.
so
Now,
the,
by the time the candle ends, it creates a huge hammer. The next candle is green. The next candle is a price flip. And that's when you admit this was simply a 1 to 4 candle correction and it's time to go significantly higher. Then you make up for all your losses on the way up to 75.
then you have that back test, which is at 5,400.
This one.
Ultimately never back testing the previous high.
Right. I personally felt we came up a little short, but history will dictate whether it's close enough. Like if we go to 50,000 from here and never fall back below 10,000, history will always say 5,400 was close enough.
Okay, so did we spend enough time above 10,000, 15,000 to consider this being back tested? Because you used to say in the past that, hey, we need to spend a certain amount of time above 10, above 15, or whatever, for me to consider this 5,000 high as back tested. Where are you at on that?
No, we did not spend enough time above 10,000. We literally only spent between early December and mid-January, right? So we literally only spend 1.5 months above 10,000, and then we went back below it. We are recently back above it,
Right.
but no, I
How
consider
how long
spending
should we have stayed there?
3 to 6 months.
Got it. Okay.
2 months is just not enough for me to consider that we've spent enough time above 10,000, that 10,000 should be good support going forward. And it wasn't, right? Because we broke below 10,000 and made it all the way back to 6, which
Right.
again, on a move from 20,000 down to 6, did we come close enough to 5? Once again, the answer is once again maybe, right? Because while we only came up $400 short before, and you can see the consistency here, right? The first time we tried to backtest 5,000, we came up $100 short, but we were only falling from 6.
Right.
The next time we were falling to 5,000, we were now falling from 7,500. So we're falling from a much bigger area, and now we came up $400 short. The next time we were falling back to 5,000, we were falling from almost 20K. And now we came up $1,000 short. So while we are increasing the nominal amount, we keep reversing from above 5,000. On a percentage basis, We might even be coming in closer every time. Does that make sense?
It does. It does. Okay, so can you go back to the previous high of 1300 or whatever that was right below the 1300?
The
1300.
This one here with the part of the cup and handle.
No, not 13,000. No, 1300.
1300. Okay,
Yeah,
so that goes all the way back there. Let me put log scale back on because otherwise it will become a mess. So you want to go to when we made that high of 1300.
Yeah, and then
Right.
just
This was the mess over the Bitcoin ETF back in March of 2016, 15, 17?
Yep.
Back in March of 2017.
17. Yep.
Right. So we're looking at this mess. I warned people to get out in this area because of, well, it was before I was looking at the nines, so it actually had nothing to do with the DeMark counts. I wasn't looking at it back then. All right, what's the question?
Scroll over to the right a little bit. Scroll the chart over to the right.
Sure.
No,
this way or the other way?
The other way. I'm sorry.
The other way. Okay.
There seems like there's another high coming up here on the left.
Yeah, there was a high before that. This one.
Yeah, which high is that?
Oh, that was beautiful. That was the $1,100 high.
Okay.
I'm trying to think what caused it, and I really don't recall anything all that significant. I'm trying. Oh wait, I have a note. What happened? China raised the value of CNY, followed by news regulators followed by news of regulators showing up at the exchanges. Okay, so price was going up and it got derailed when Chinese regulators showed up at Chinese exchanges.
Okay, and then when was this back tested? When was this high back tested then?
Well, it kind of wasn't, sort of, because we had like two similar highs. Like this one was in its own vicinity, but
so it's not
slightly higher, right? So that's the thing, right? Like it was. This is what makes it a bit annoying, is because this high didn't go high enough to give us a beautiful back test of this one, right? This one was just a fractionally higher. This was about 1150, and this was about 1350. And then we took off. So in a perfect world, this high would have been, let's say, at 1500, allowing us to backtest 1100, and then going up from there. And then this thing that dropped from 2500 down to 1800 could have perfectly backtested this guy. And then it would have been perfect. Does that make sense?
It does, but it didn't do that. So it
didn't do that.
And is it because this is a 24/7 asset? Like maybe TA it doesn't apply?
No, because no, TA is just you can't have a perfect world.
Okay, so it's just, really
The chart doesn't have to do tomorrow what it statistically I expect it to do. Right? That's
yet up until this point, it has always done what it's supposed to do, and that's always backtest.
Right. So up until this point, not only that, up until this point, it was beautiful how Bitcoin was just contained in this channel. Oops.
Now, is that explained because of this channel that we broke out of and never went back to? This right there. That
let me zoom out a little. Like up until that point, Bitcoin was in this beautiful channel, and it was there for a good amount of time. And as you can see, these peaks, both of which had a 9 involved in them in hindsight, including this one, they actually came up short from the top of the channel. So Bitcoin was actually a bit weaker during this mess. During both of these news events, Bitcoin was a bit weak. And then when we went up, we broke above the channel. And then it took off like a rocket ship, though I expected it to come back more into the channel. Like I really, again, it was just unfortunate that if both of these peaks were spread out a little bit longer in time, and managed to make it to the top of their channels, then all of this would have been perfectly clean. Like you can see how clean we back tested the $3,000 area, and then we slightly came up short on back testing the $5,000 area, but within margin of error, and then we perfectly back tested the $7,500 area here. So the next great back test would be if we go to 50,000 to then come back to 20. But it doesn't have to do it that way, right? Like this is what we hope for in order to enter perfect risk-reward trades.
I just, I guess I've heard you say so many times that, you're almost speaking with certainty that it's going to backtest, to maybe 3,000, maybe to 5,
No,
3,
no,
maybe
no, 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 no,
1,300.
no. That certainty comes in upon the break of certain metrics to the downside, right?
Right.
Like right now, there is absolute zero, not zero, but the certainty of us going back below 6,000 right now is insanely small. But this is kind of how trading works, that it's not easy buying the dip. It's a lot easier buying the breakout. Like I am very confident right now that we're going to go higher. I was also pretty confident at this level here that we're going to go higher because there was no resistance here.
Yeah,
Things can turn any minute, right? But assuming that we are in, the busting of a bubble on January 6th is actually guessing. There is absolutely no technical indication. Like, for all this is, like, here's what you are looking at. Let me zoom in here and do this. Like, on this day, what it looks like is a bounce off the 50-day moving average.
Which day are we looking at?
We are looking at the last day you see on this chart, January 6th, right? So on that day, I am looking at a 5 of 9 to the upside, okay? Now, there was also a 5 here that reversed us, okay? I am looking at a 5 of 9 to the upside. I have absolutely no resistance here, none. We just bounced off of the 50-day moving average while making a higher low, though granted a lower closing low. I have absolutely no reason to consider any kind of sustained downside on this day. We move one day to the right. We now have a bad day. Remember, this trend line is not here. This triangle is not there. None of it exists yet. Okay? Though we did break out of a smaller triangle because you could have drawn a symmetric triangle using this point. And this point. So not only that, I have another bullish sign that it looks like a breakout of a symmetric triangle that's taking place at the top, including the high. Now, the next day gives us a price flip that comes back to the 50-day moving average. This price flip puts you in cash and puts you in dangerous territory. Like, hey, you know what? Now you're consolidating at a 50-day moving average again. Hitting the 50-day moving average for the third time in a month is dangerous because the more times you hit the same support, the more likely it is to break. Talked about that many times. Once the next candle comes, next couple of candles, now you're starting to get nervous because now you're forming a bigger symmetric triangle. You are dangerously close to breaking and closing below the 50-day for the first time in a year, maybe longer. Okay? And the next candle crushes you. Now, you see this red line?
Yeah.
That's my numerical indicator telling me, and I guarantee if you go to a video from around this time period, I would say, hey, your time indicator is telling you to potentially go short. And the last time it told you to go short was over here, because that's the last time a red 2 crossed below a red 1. because on these red numbers, you can see how they're not going lower. 2 is not below a 1, 3 is not below a 2, and then we get a bullish price flip. Okay?
All right.
So
go ahead.
One
If you're
second,
done.
let me get one more candle.
Yeah,
And then
please.
the next candles are now below the 50-day moving average, with the 50-day moving average acting as resistance, and you can see how beautifully it's keeping the price down.
Right.
You get this price flip that is generally irrelevant, and then boom, we go down and we stay below the 50-day moving average until yesterday or 3 days ago.
Question for you.
Yeah.
So we have the 2014 right correction from all-time high to back down to like $100 or something on
150 in January, and then again in August of 2015.
on Bitfinex. It was 100. It went down to $100. The wick of the candle went to $100.
Really? Damn, that I was right, because my target was 110. I always thought I was wrong.
No. If you go back to go to date, it's down to $100 from 1175 or something like that. That's a 91.15 or 92% correction.
Correct.
Right, and that's consistent with the whole parabolic upshoot coming back down.
Yeah, it's not hyperwave. It's not hyperwave stuff that I talked about with Tyler James.
It is or it isn't.
It is.
Oh, it is.
It's the same concept. Yeah.
Yeah. This time feels very similar, but we have a lot more. This is more a philosophical question. We have a lot more people looking into Bitcoin, allegedly investing, but less people are, as you say, are using it. Right. The mempool is low, so it's like.
Well, I wouldn't say less people are using it. More people are using it. It's just that not a lot of people are using it compared to the kind of hype and price that I believe that it has.
Right. So,
but
are we not hyperwave thing again? I mean,
we don't know yet. The jury is still out. But you also have to think about it this way: 20,000 to 6,000, right? Because remember, 20,000 to 5,000 is a 75% correction.
Right.
So 75 to 6,000 is probably 70 and change.
Right.
So we have just fallen 70%.
But not the 80, 90 that we're supposed to allegedly. But
no one says we have to fall 80, 90. Right? Falling true. 60, 70 is decent, right? It's a pretty big correction. And we're now taking it 1 day at a time, 1 week at a time. And we may not even know for another month whether we bottomed at 6,000 or not. My view is this: if we close on daily basis and especially weekly basis back below 7,500, we're probably going lower than 6, right? So that's how I judge it. So do I think right now we're going to go back to that $1,300, $2,000 area? Because remember, dropping 90% from 20,000 is 2,000.
Correct.
Right? So,
which is the bottom of your channel, which is like right at the bottom of your channel. That's below. Can you scroll up so we can see that?
Yep, I will. Let me take log off again. Oh, actually, no. Let me put log on. Right. Well, the purple line.
Below that. Yep, exactly.
Right. So the bottom of the channel is in that vicinity, and the top of the channel is still at 4,000, but rising somewhat quickly. So my view is we're above a lot of all of that resistance that we were dealing with in this entire week. If we go higher, if we can go another $1,000 higher, all that resistance has now become support.
Right.
And the probability of Bitcoin going back to 6,000 is incredibly low. But the way I look at it is, this is my case for double bottoms. The moment Bitcoin even gets to within sniffing distance of this area
Sure.
of between 6,000 and 7,500, I become one of the biggest Bitcoin bears looking for it to go all the way down.
Right. So hypothetically, would the next potential bull trap be at 13 or 14 or in between? Is there any way to tell at this point?
Okay, so based on daily charting,
right,
there is no more bull traps. You can't have them, right?
Okay.
Based on a daily chart, if it reverses anywhere here, it has a good enough reason for someone to spot a technical point of resistance for a turnaround, right? If we get above the prior high, we are to within sniffing distance of the all-time high. So for the same reasons that if we get to within sniffing distance of the lows, I'm expecting it to go way down. If we get to within sniffing distance of the highs, I expect it to go way up. Now, there is a chance that there is enough room, there's $2,000 difference between the bull trap high and the all-time high. So that is a potential secondary bull trap, but that almost never happens, right? Because
okay,
right, because it no longer looks like the bubble chart at that point. Right. However, the weekly chart tells a different story, right? If you zoom out on a weekly chart, the weekly chart doesn't have that bull trap that the daily chart does.
Let's see.
Like if I zoom the weekly chart out and try to even sneak in.
No, you're right, because you got the 9 and you've got the 1 to 4 candle correction, and then
no, forget that. Forget the DeMark stuff, right?
Oh,
like,
okay.
Picture a typical bubble chart, right?
Yep.
Picture the hyperwave chart that me and Tyler were talking about, right?
Yep.
Like,
I'm with you.
You see how in 2013 the weekly chart fell all the way down and then went all the way up, and then boom, it dropped.
Yeah.
The weekly chart never really did that, and the weekly chart can still give you a bull trap in the $15,000 range.
That makes a lot of sense. Comparing that view right now that we're seeing, that makes a lot of sense.
Right. So
what does the monthly say about this, or is it
the monthly is just straight up? The monthly doesn't have enough candles to to do anything useful.
Okay.
So you have to watch out that if we reverse on the daily in the vicinity of 15,000, it would almost be like it would have to be probably lower than this, but it doesn't have to be. But like the daily chart won't give it to you. The daily chart will look a jumbled mess, but because it's taking place on a higher level time frame, I mean, the fall can be swift. We can go from 15,000 to 10,000 in 3 days. Right, and it will be the similar looking chart to this with this bull trap here, but on weekly levels.
This main trend line that you have, that a lot of us have, should that be deleted at this point, or can it be updated? Do we have another?
This thick blue line?
Yeah.
No, it should probably stay for a little bit longer because of a potential back test back to this line. So, for example,
which is a good sign, right? If it touches it and bounces back off of it,
it's a neutral sign, because if it goes back and it breaks below it, that would like create all kinds of hell, right? But it's technically possible for us to go down at this point, and in about 5 days from now, bounce off of a combination of the 50-day moving average and trend line, which are almost touching.
Got it.
Okay. But you have to stay above the prior low. Like, so this can kind of take its sweet time going back down, but it can't take too much time, right? Because once you if it drags on. All right, come on, what's going on? Can't seem to change color. All right. If it drags on for too long, Like it can't drag on for that long, right? Like it can't really get past this corner.
Which is what, 94? Yep.
Right.
Sense.
Like and at that point in time, like if it goes to 94 tomorrow, then that's also bad, right? But like you need to like 95 area. You really want to stay noticeably above the prior low.
Right.
And at the same time, you want to stay above the trend line. And at the same time, you want to stay above the 50-day moving average. As long as you're staying above those things, the target from the cup and handle is still in play. Once you go below these things, then you delete this target and you say, now we're going down.
That target is right into that 15,
yes,
16,000 area.
Exactly.
Makes sense.
But, you know, it's still, like, no one knows if the 6,000 is here to stay. Now, with the action of the last week, it has become insanely more likely that 6,000 is in.
Right.
But not 100%. Like, I can tell you what I am very, very certain that we're not going back below 1,300. That's right. Like we're not gonna go back and retest. You know, the
1150.
Well, 1150 is somewhat in the vicinity of 1,300, but we're not gonna go back and retest. Let's say the price during the last halving, which was a pump to like $500, right?
Right.
Like that one is like not gonna happen. Like I'll be out of Bitcoin and moving on to, you know, some other parts of my life if that happens, right? Like I'll change professions again. So I have zero expectation that we're going back to test some of the old levels, but and one day maybe 1350 will be completely out of play, and one day hopefully 20,000 will be completely out of play, right? But for now, in my head, if we can make it back to the vicinity of 6,000, to the vicinity of 7,000, it puts 1,300 back on the table. It doesn't put 500 on the table, but it puts 1,300 on the table.
So let me ask you this. If we never would have gone above 16, 17, or 220, if we would have just, if our all-time high was the 13,888, that Cliff High was talking about a year and a half, 2 years ago, saying that in March of 2018 we're going to be at 13,888.
He's close. We're almost there.
What would like would that change any of your analysis and with regard to back testing?
Like for example, I would actually feel way more comfortable with the current price of Bitcoin if this was the new all-time high, and we did have a bigger pullback from 7,500. If we did have 7,500 as what I expected to be the high for the year, and we pulled back to 5,000, maybe even 1,300, and then made it all the way back to our current price of 11,200, where we at right now, if this was the new all-time high, I would be feeling way more bullish and optimistic right now than the current state of 11,300 at the moment. And to be honest with you, I feel pretty comfortable with the bullish case now because of the cup and handle.
Right.
Yeah. On the flip side, if we never made the $6,000 low and we were at current prices and we drifted to this price slower and this was the swing low price, I would be pretty pessimistic right now.
Sure.
Right? So it's not about what price it's at, it's about how it got there.
Okay. Making sense a little bit.
What else you got?
That was a lot.
Well, that's why it's being recorded, so you can re-listen to it as many times as you like.
Right. Let's see. The 2980 area. 2,980? Yeah, 2,980 area.
Okay, let me go. Let me
some,
drop. Let me. Oh yeah. Let me go to log scale.
there's some debate among,
That didn't really work.
newbie and junior traders like myself that, there's some untested or unperfected things there. Unbacktested things.
Let's go. Let's go and find out. The
Let's take a look.
2980. All right, I'm in the vicinity.
How did we get here? What did it end up at, and where are we going?
The drop from 5,000 down to 3,000.
Right.
Right? That what we're talking about?
Yep.
No, that was perfect. I have tweets about that.
Yeah, I remember that. Remember you calling it.
That was a perfect call. I called this to within an hour of the high and to within an hour of the low. So I called that one perfectly. You can see that is the 128-day moving average, which I wasn't even looking at the time, but it was the prior $3,000 high and the vicinity of a breakout that took us to 5,000 that gave me confidence that this has a high probability of reversing the price. I was then even extra confident when the 9 came, even though it wasn't perfected. And once we, got back above the 50-day moving average and broke out here on this 2 going above the 1, I was as bullish can be.
Yeah, it seems that that 7 right there is the what's in question of never being retested again or backtested. So
yes, which well, it doesn't have to be retested. It's not the 7 that needs to be retested. It's the 9.
Yeah, that's okay.
It's this area, the 5,000 area, that needs to be retested. And like we already discussed, we came close 3 times.
Okay, so it's really that area. Okay.
Right. This, you don't want to be retested. If this gets retested again, we're going down to 13.
Right.
This is not going to hold it up again with the same kind of veracity.
Well, yeah, I could see that. It was already backtested to that.
Yes.
That is the previous high. So really the 5,000.
The 5,000, yeah, which we already discussed.
Right. Okay. All right. So can we take a look at that weekly one more chart?
Sure.
And compare it to the daily, just real quick.
Yep, right. So the weekly does have that, especially if I spread this out a bit to capture the low area. Right. The weekly has that bubble-ish look where you have the first dip coming back up, and somewhere in this blank space, you reverse for a correction that takes you below the 50-day, because, again, this looks very similar to the daily, where the first move, I mean, in this case, we intra-candle dipped below the 50-day and came back up. On the weekly, we intra-candle just stayed above the 50-day. But the essence of the chart is the same.
And scroll over just so I can compare it to the 2014 real quick.
Sure. Let me make that 50-day a little bit bigger. A little thicker.
Got 1, 2, 3.
Right? So, let me do it. Yeah, there it is. So here's that initial dip with a big wick, and here it is here. Now, granted, it took a little bit longer here. This took 2 months. This only took 1. But the up move was longer here, right? Look at how fast we went up 10x. Right? For us to go 10x here, we need to move from 2,000, right? It took us about 6 months to get up there. This only took about 2 or 3 months, right? So we got up there in half the time, and then we made the first dip in half the time. Then what happens now?
Yeah, so we're looking at a Bitstamp weekly, but then our dailies Finex. You like to use Finex for dailies?
Yeah, it's not even that I like to use it. It's more so that all of my annotations are on these things. Right. So it's more for like I can't spend 3 days like I would be too bored. Like I don't want to. So I think all prices are in general vicinity of each other. So it really doesn't matter. And I don't want to switch all my charts to like a single index, because what if that index goes under and now I have no charts, right? At least if one of these things goes under, at least I have annotations on some of them. Like I like to spread it out.
Right, right.
So the underlying price is almost irrelevant here. But the point is we made a swing low and now we're coming up, and you can see how it was actually the other Fibonacci that I don't even have drawn, the 76% Fibonacci. I don't have that here, right? Like I can add it. Let me see here. There it is. So it was actually this Fibonacci. Let me just make sure. I have, no, 38. So it's the 26th one. This one. So it's kind of like that Fibonacci that made a difference in this secondary high before the weekly chart collapsed. So it's that guy there, which again puts you at 15K.
Right.
Right. Now you can also say, hey, we went up to like 1200. The first dip was at under 400. So that's a 75% correction. That's a third. Yep. Right? 1200 to 400 is a third.
Yep.
2/3 we fell. And this time we fell from 20 to 6, which is also about 2/3.
Yeah, but this is Bitstamp. Like if you look at the other down points, where you see where your mouse is, on Bitfinex, it went down as low as $100.
Oh no, I think that's a data error. No, I even have it listed as that. No, I wouldn't trust that. Like yeah, I know. I now I understand what you mean, and I'm pretty sure I have the. I'm pretty sure I know what my chart's gonna say, if I zoom it out enough. Oh, jeez. The history of Bitcoin. Right there. It says ignored. I'm ignoring that. That's not.
Why? Talk to me.
Because, again, it goes into the same thing I mentioned earlier. I don't consider even if this actually happened and it's not a data bug, even if it actually happened, it would have happened for like maybe a tiny fraction of a Bitcoin for one trade. That it doesn't mean that like this was actually, there was a real trade taking place there. It's if it happened, it probably happened for 0.001 Bitcoin, and the person paid $1. Like it's completely irrelevant to the ecosystem.
So this never took place, is what you're saying, or might have?
It's possible that it took place, but it could have also taken place on such a tiny amount of money that it has absolutely no relevance in its technical. It has absolutely no relevance to the technical picture you're trying to trade.
So then, what was the bottom? 150, the true bottom?
Yeah, the real bottom was here. You can also tell by the volume. The real bottom was here at about 150 with the bear whale incident, and then there was another bottom here, which was, I think this was the bear whale. I forget which one was the bear whale. But there was the famous bear whale incident.
That's not a double bottom right there? Those aren't double bottoms scenarios?
It is a bit of a double bottom, but you can see that first of all, they are pretty damn far apart.
They are.
Especially in Bitcoin time.
Right.
They are January to August, so they are more than 6 months apart. This was like January 1st.
Okay.
You can also see how this took place on incredibly higher volume than this. Okay, so while at this time, like I said, this area also it was complicated for me to properly guide my followers through this area, because this was always my target low. This was my target low from mid-2014. My target low was midsummer in the vicinity of 110 bucks. Okay? Now, there's videos of me saying that because we fell down to 150 bucks in the beginning of January, I clearly say in a video, it was a video with Jeff Berwick actually, I clearly say that, hey, we have met my price target on the low to within a reasonable margin of error. But we got there 6 months earlier than I expected us to. So at this point, it was very difficult for me to call this the low. Because if this happened, if the same price action took place 6 months later, I would have been completely on board that, hey, 150 is close enough to 110, considering I've been calling for this since like this triangle at like $600. Okay. So, but it came 6 months early. Now, when we continued going up and we kind of started to rise in this area here, I had already given up on my time target has come and gone. Our price is now more than double from what it was at the low. Kind of like right now, we're almost at 12,000. We're more than double from the $6,000 low. We've gone up 100%. So around this area is when I started to give up on my $110 price target, and I was forced to go bullish. And then we had this big drop, though we recovered quickly.
Right.
So,
hey, Tone.
Yeah.
We have a few minutes left. Can you talk to me about the alleged manipulation of the Bitcoin market? I mean, there's people saying that, oh, it's an unregulated market, but like, if you ask some other folks, they have strong conviction that it's a heavily manipulated market, and if it is, how would it be manipulated? How is it being done? Just like for a layman person to...
Sure. So for a layman person, what the layman person needs to understand is when a person is unable to profitably trade, they will cling to any excuse they can to explain why A, they fail as a trader, and more importantly, B, why they fail in their predictions. And the most famous of these types is the gold bugs, who continue to blame manipulation for their continued horrible guidance of convincing people to buy gold, right? So you always have to take a look at why is this person blaming manipulation, and most of the time it's because it's for one of those two reasons. Okay, now people blame manipulation of regulated markets because the regulation is what allows manipulation. People also blame unregulated markets that because there's no regulation that they're being manipulated, right? So it's just an excuse. It's just an excuse. Now, I don't believe that anyone can manipulate any market long-term when that market has an element of free market. So, for example, diamonds are excluded. Diamonds have absolutely no free market. There's no open trading of diamonds. There's no secondary market for used diamonds, not really. There's almost nothing, right? There's no futures for diamonds like there are in gold. So diamonds are completely manipulated, right? Because it's a government regulation to eliminate any kind of free market trading on diamonds. So that's a manipulated market, right? Not to mention that there's lots of evidence that they're not even that rare, and it's just a complete, media campaign to convince guys to buy diamonds, right, for girls. So that's a manipulated market. When it comes to trading markets, I don't believe in long-term manipulation because, first of all, there's always a bigger fish, there's always a bigger whale. So even if you try to, let's say, corner a market like the Hunt brothers tried to do with silver, something's going to go wrong. In that case, the government actually stepped in. But even if the government didn't step in, like, hey, if these two people own all the silver, why do we care about silver? Right? And then everyone will say, well, who cares? No one cares about silver. And now silver goes to zero, right? Like if you buy up every Beanie Baby, like who cares about Beanie Babies, right? Like if you buy up every single, Michael Jordan baseball card, people will forget about Michael Jordan. And the card and the value of that card will go to zero. So the manipulation of the market is like grossly overstated. Now, can you find advantages in the market where you can profit? And the answer is sure. If you are, let's say you're watching the order book of Bitfinex, and you realize that at a certain point in time, let's say, hey, at exactly, let me think of a good time here. At exactly 8 p.m., or not 8 p.m., something like that. Like I can say at exactly like maybe 1 a.m. Eastern time, the most amount of people that are trading on Bitfinex are asleep. And that's when the order book is insanely thin. No one's really trading. It's really thin, right? And then you're watching it every single day at 1 a.m. And then, like after 2 months of watching it, you go, oh my God, not only is it super thin at this time every day, it's 50% thinner today than it normally is. To the point where if I sell or buy $50,000 worth of Bitcoin, I can move the price of Bitcoin by $1,000, right? Like you just happen to catch that zone. And then you say, how do I profit from that? Because if I do that, I will be buying overbought Bitcoin as I blow up the order book and eat away everything and just throw the price up. And I have, and my plan is that if I do that, other exchanges would scramble and they would think that I'm so smart and there's mass adoption and the S curve, and all of the Bitcoin price will go up globally by $1,000 just with a $200,000 investment at a perfect time on a perfect day. So the way to take advantage of that is before you start that $100,000 move, which will probably cost you 70 or 80,000 because the price is going to fall, you go and you place a $5,000 bet at 100x leverage on a futures exchange. And now you blow your book, you lose $80,000, but you make $500,000 on the futures exchange because you're going to liquidate all of the people that did not know what you were doing.
And that's a competitive advantage. That's not really manipulation, or
well, I don't know.
They're one or the other. They're one or the other. That's
right.
Right.
Well, I don't know. Thing. Is it manipulation? Is this legal? Now here's the thing. In traditional markets, this is difficult to do, right? Well, it's not that difficult to do, right? It's actually pretty difficult to do in traditional markets because you can't do that with gold. Because in gold, the leveraged futures is what determines the price of your Bitcoin. So you can't place a giant leverage bet on a future and at the same time move the underlying price somewhere else in the marketplace, right? So the way people do this with stocks is they go and buy out of the money options. So they go and buy these options for 10 cents because they know something's going to happen, or they know they're going to cause a news event on that stock to move it. But this is also why you can't buy options on penny stocks. You can't even buy options on stocks under $1. They're grossly expensive. The bid-ask spread is gigantic because of this, right? If a stock can easily be manipulated with $1 million or $2 million, it's very difficult to buy options on that stock. The options are not very liquid. No one wants to sell them to you because the option maker can take a giant loss. Right?
So the scenario you just described with the the manipulation of doing like a 10x or on futures, and then and then having another parallel trade, a losing trade on Finex, and then maybe like a winning margin heavily leveraged trade on BitMEX is I mean, the introduction of the CBOE futures is that the indirect way of how the market is being manipulated by some?
Well, not really, because the CBOE futures only give you 3x leverage, and that's not enough to profit from this trade. It has to be at least 20x leverage on something like this.
Yeah, right? So they're just using BitMEX for that, right?
Yeah, Bitmax, or there's others, right?
Why the hell did they even roll them out? Was it just to build up, get the price up to 20?
What do you mean? Oh, the Wall
That was,
Street?
yeah,
Well, no. I mean, again, right? People have these conspiracy theories. CBOE and the CME, they're not in the business of profiting from manipulation. They're in the business of profiting from offering real traders an ability to trade something where they have the most liquidity because they're making money on the fees of every trade. Again, same thing with Bitmax. Bitmax, it's not Bitmax's problem if people are using them in the way I just described. They're
right,
just there to collect a premium on every trade, right?
yeah,
I mean,
right,
now the CME tries to make their futures as fair as possible so that nobody gets scammed, but no, they rolled them out because they saw an ability to make money, basically, and the and they had the legal jurisdiction to do it, right? Like they got the approval from the regulators to do it. So trust me, if the CME can get the approval of the regulators to add diamond futures, and they felt that diamond futures would provide some kind of liquidity where they can profit because people are trading diamond futures, they would do it.
right. Yeah, Tone, I think we're at an hour. This has been helpful. You want to cut the audio so we can just have like a minute or two?
Sure. All right. So
All right,
I hope this was
thanks.
helpful for everyone. I think this was a great discussion, and this will be a private video. So let me stop recording here, and hopefully I'll do more of these.